Now, just a few words, okay, about order flow. And if you've been around and we've been watching, okay, the charts, okay, which we have, obviously, okay, what we do over here is very different from what is available outside. Okay, and we've grown far beyond, okay, what other people call order flow. You know, when I was first exposed to this word called order flow about 14 years back, for me, the picture which was presented was that there are certain numbers kept on a chart, and those certain numbers mean order flow. Okay, that is, okay, what was presented to me. This is about 14 or 15 years back. But today, order flow is gone, okay, much beyond seeing numbers on a screen, you know. And in a sense, a lot of people, when they use that word order flow, they are so zeroed in on what is happening in a particular bar. Okay, so they are focused on that 5-minute bar or that 3-minute bar or whatever bar, okay, they are looking at that 30-minute bar, and they are just focused, okay, on that information which is there in the bar, neglecting the reason that bar is being created or what was in the immediate past to make that bar appear in the way it is. See, that bar which is developing, the volumes, okay, which are coming in front of you on that particular bar in which you're zeroing in at the moment, is because of a few things, okay, which happened in the not too distant past. In the immediate few bars, certain things have happened, and that is, okay, creating the impact or the volume in the bar, okay, which you're looking at the most right hand corner of your screen. Okay, so a lot of people neglect that utility which is there in those 4 or 5 bars away, okay, from that current bar, to the left of the current bar. Now, I believe, and it is my belief system, that you need to look at order flow much beyond, okay, that current bar, and have an understanding about what is the context or the driving force, okay, which is making that current bar do what it is doing right now. Right? So our conversation on order flow is not just about talking about one particular thing happening in a current bar. Okay, it is leading up to that development out over there which is happening. Okay.
Now, a lot of us, okay, when we first see an order flow chart, we focus, okay, on this candle. We focus, okay, on this color of this candle, and our minds are actually, okay, programmed, okay, to just look at what this color is. But this color, we have to, okay, just put it aside, okay, for some time and try to understand, okay, why sometimes, okay, this color is red and why sometimes, okay, this color is green, or what really happened, okay, between the high and the low over here. So what we're doing is, in order flow, is we are adding data to a chart. We are adding information to a chart, and we are trying to find out what happened, okay, between the high and the low of the bar, or what happened, okay, between the open and the close of the bar, right? Now, the color of this candle is dependent on the open and the close, right? So if the close of the bar, this is the close. If the close of the bar is lower than the open, the color of the candle is red. Or if the close of the bar, of this particular bar, is higher than the open, the color of the candle is green. Right? In order flow, what we do is, like, okay, we don't pay attention, okay, to the information in the color of the candle. What we do is we try to find out, okay, what has happened, okay, between this buying and the selling. Now, this candle has closed over here at 11:15. Why did it close over here? Because, okay, it met, okay, a little bit of serious buying over here. Took it from the lows of 51,219 and placed it right here, okay, around this 51,275, 280 mark. Right? The same thing over here. This color became red because there is a 314 lot seller which came in exactly at 51,412 and pushed this from the high to this close. So what you are seeing is, you are actually getting a little bit more information than the open, high, low, and close of the bar. And you're seeing, okay, in this important points, okay, where the seller is operating and where the buyer is operating.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? So great. Welcome to this 5 p.m. session, and let's get on with what we have for the session today. Let's talk about the failed auction first, which is a very important concept in market profile. We have had a session on failed auction before, also in one of the 5 p.m. sessions, and let's do a review of what has happened this week, both in Nifty as well as Bank Nifty, spot as well as futures, and see how the failed auction concept of market profile held us to develop a bias for the week. So starting with the Bank Nifty futures chart, which is on screen right now. Before I come to the failed auction of this week, let us just have a quick review of what the failed auction is in market profile. So as you must be aware, we have the first hour marked as the initial balance in market profile. So and we look at the first hour to be a balance between the buyers and the sellers. And after that first hour balance, we look for a move away from that balance and see if the buyer or the seller can take it away. So when we are getting a range extension, which is a move away from the initial balance high or low, we look for confirmation in the order flow in terms of buyer or seller, and then look to trade the 2IB setup, which is the 2IB objective of the initial balance. So that is how it is placed. So what we need to figure out about the failed auction is, when we have a range extension, it means one of the party, the seller or the buyer, is in control and he's pushing the auction. But what happens if there is an attempt to make a range extension but the party fails? So that is an indication that that particular side has failed. So which is one important cue the market profile gives us structure wise, that once that party has failed, it is up to the other party to take advantage of that and move the auction in their favor. So there are some conditions for a failed auction to be prevalent. One thing is, it should remain outside the initial balance for less than 30 minutes, the first attempt to extend, and then it should go on to break the other end of the initial balance. So that uh, terms the failed auction as a valid reference, and it's a very simple task. After the failed auction is come, we are bullish about the failed auction and we are bearish below the failed auction. And in terms of targets, we look at the 180R and the 280R objectives from the time we get a failed auction and it is sustaining above the reference, which will be the initial balance high or the low of that particular day. So let's start with the Bank Nifty futures chart. And this is the profile. The profile you have on screen is the Monday's profile, which is a nice Gaussian curve. What we did on Monday is we made new lows for the series and we made a probe below previous week's low. So when we were making new lows, it was telling us that the sellers are in control. And it has been the case for most part of this series, where the sellers have been pushing it lower. So what we had to see is, it was weak, and then when we were making, the seller will always keep giving you confirmations first by a drive down and then by lower extensions, lower lows in TPOs, 30-minute TPOs. So what we did on Monday was we made the typical seaside extension. We have spoken about how the seaside is something which we need to be wary about, and how it can give you a con trade, doka period. So what we did in the seaside on Monday was, we made a marginal new low and immediately which got rejected, and we went on to break above the initial balance high in the F and G period. So this at the lows, the C period low, which was at 47923 in Bank Nifty futures, was a failed auction, was confirmed a failed auction. And our reference for that failed auction to be in play was this IBH level, which was at 48260. So once we have the failed auction confirmed, what we do the next day is we look for the auction to sustain above the initial balance high. So if it sustains above this initial balance high, the failed auction is very much in play, and we are looking for move for the 180R and the 280R. The 180R target from this failed auction in Bank Nifty of 47923 was coming to 48703. So what we did the next day was a gap up open. The news came in later, but Monday the closing profile already had told us that the sellers had failed in making a range extension lower, and we had a failed auction at the lows. So the news came in of the RBI infusing capital only after the market closed, and because of which we opened with a gap up and a drive higher. So immediately when we are above this, the failed auction is in play, and we're looking for the target of 48703, which we went on to tag, and we went on to tag that with the zone of singles initiative players. So you can see how this initiative tail confirmed the bias was to the upside. The buyers are taking control after they seen that the seller has failed the previous day. This is how failed auction gives us that important cue and confirmation by the other party that it has gained control by this initiative tail. You know that till the time this initiative buying tail is holding, we are looking for more upside in bank nifty, and the target would be the 2 ATR, which comes to 48484 49484. So another cue of the auction being bullish was because we always remained above that 48703 mark, which was the 180 target of the field auction. So what we did, we formed a trend day higher on 28th, but we hit one important sell side reference from the 21st of Jan. After which we made a big pullback, and then we consolidated yesterday. And yesterday, what we did was, again, you can see we opened above VWAP, and this was confirmed. This was confirming that the buyers who had entered on 28th were coming back, and then we could not take off the value area high of previous day and this reference. So what we saw was a pullback in the E period, but which was more a swipe, and this swipe got rejected and resulted in another failed auction in Bank Nifty yesterday. So as soon as we swiped and we got rejected, we went on to get above IBH and we closed above the initial balance. So again, for the second time in 3 days, we saw another failed auction coming in, and at a higher level also the seller failed. The seller failed. So our new reference for today became this failed auction, which Bank Nifty left yesterday at 48812. So as long as we were above this, we were bullish for today's expiry. And what we did today, we opened above the VWAP of yesterday and we left this buying tail. So it is again telling us that the seller failed here and the buyer is taking advantage. So once you are above previous value, you're looking for more upside. Although we did not get too much of a big range because of the monthly settlement today, and this selling tail proving to be a resistance, the failed auctions gave us the bias of the week, and they told us that the supply was dying at the lows, and then the buyers were taking control. First point of the seller failing was this, and then the buyer gave the confirmation here, and the next point came here of the seller failing, and then the buyer took control over here. So with today's buying tail and the VWAP as the reference, of course we will start the new series from tomorrow. So this is based on the January series which is expired today. The similar levels will come in play in the February series. So this becomes our reference for the auction to move towards the 280R target of 49484. So this is how the failed auction forms an important part in market profile, and based on the next session, we can look for some good opportunities. So this is as far as the Bank Nifty futures was concerned. Now let us have a look at the spot chart of Nifty. So spot does not have volumes, but it still gives us these important concept of a failed auction. In fact, the lows we made in the COVID crash was stopped by a failed auction, and that is one of the most talked about failed auction we have at the VMR. So again, this week, what happened? We opened lower, we formed a big neutral profile on the first day. Sorry, we formed a trend day down in Nifty spot, and we went on to make new lows. We almost went on to tag that VPOC of 22745. We discussed about this in the session on Monday we had, and we saw how we had tagged that low of the buying tail which we had from 6th of June. So we had left a responsive buying tail here, and what we did the next day was we opened higher. So this buying tail was holding, and we got an higher open which got retraced a bit because we saw lower lows made in the B, and then we made that marginal seaside extension to 22857. So this POC was holding, and this seaside a similar kind of a rejection which we saw in Bank Nifty futures on Monday was shown in Nifty spot on Tuesday. And then we went on to get above the IBH and we went on to close above the IBH. So this 22857 became our reference for this monthly settlement in Nifty spot. And this was when the entire scenario was bearish. So the failed auction was telling us that the seller has failed. And this came after a very long time. And then became our reference after this failed auction came into play was this IBH, which I had discussed, 22972. And you can see how on 29th, which was yesterday, we opened right, we took support right above that. So this is telling us that the failed auction is in play. The 180R target was from this failed auction was already completed on 28 itself, which was at 23075. And you can see how this halfback of this day, 23075, which was completed on this day itself. And we went on to make a retracement into the close, which briefly broke below this initial balance high. But the next day, once we opened and stayed above that, it was very clear that the failed auction is still in play. So what we went on to do, we went on to get above that 180R again, and we kind of formed a halfback over there. So this was telling us that the bias is still bullish and we can look for more upside. We formed higher value in Nifty spot and we went on to make new highs of 23183. So after which we've opened today, and what we did, we opened above this POC, we trended higher, and then we went on to complete the 280R objective from that failed auction of 22857. The 280R objective from that failed auction was 23296. So you can see how exactly we stalled there in this seaside, and we held this selling tail from 24th of January. So what we did after that, we went on to probe lower, and you can see this seaside extension stayed for less than 30 minutes outside. So technically, when we made this marginal new low in the K, the failed auction was confirmed at the top. But what happened into the close, this failed auction came right at this POC. So this is why in spot we give so much of importance to the POCs, point of control of all time frames, be it the 3 minute, be it the daily, weekly or monthly. So what we have done today into the close, we have spiked higher. So we have also got a failed auction at this 23138 level. So this is what is going to hold, and we will have to see tomorrow when we start a new series. Although the calendar month is still not over, if we stay above this 23300, we can look for more upside to close the calendar month tomorrow in January. So this is how the failed auction played out in the Nifty spot. And finally, let us now move on to the Nifty futures and see what failed auction we got in this. In Nifty futures, we did not get any failed auction in the first 2 days. We saw a failed auction in spot, but in futures there was no failed auction because the C did not make a new low. But we did get a failed auction yesterday. Yesterday, you can see how this rejection, this E side attempt to extend lower got rejected at the VWAP and the POC of 28th. So this rejection and then confirmation of the failed auction was telling us that the seller has failed. So the 180R, the failed auction yesterday was at 22963, and the 180R target from this failed auction was 23186, and which was exactly the high we made yesterday. So not only the confirmation of who is failing, it also gives you an approximate idea about the target you can look at. And we went on to make that high and then came back to close at the POC and the VWAP of the day. So today again we have opened above yesterday's VWAP. So it was telling us that the buyers are still in control and they we are looking for more upside. But again, once again, the C side stalled the up move, and the settlement inventory picture came into play, and that is the reason we were not able to extend any more after the C and D range extensions. So this is how we look at failed auctions and form our bias based on that. And when you're getting continuous failed auction in one direction, you know that the direction of the auction is only towards that, and you need to be in sync with that message. So this week was very interesting. Bank Nifty opened on Monday with a failed auction. Then Nifty Spot gave a failed auction confirmation on Tuesday, and on Wednesday both Nifty futures and Bank Nifty futures gave a failed auction at close. So for 3 consecutive days, we saw the seller failing. So when the seller is failing, the only path left is to the upside. So that is what happened, and that is the reason. Although it has not been a clean up move, we have been getting deep cuts. But overall, whenever we are getting the confirmation of a failed auction, it is giving us some good setups to get into on the long side. So this was as far as the failed auction was concerned. Hope this session will help you guys to identify the failed auction and continue to make use of it in the coming sessions. So now let's move on to the order flow and caught of Nifty for this week. So just like how we saw uh, that the auction was telling us the sellers were failing using the market profile chart, let us now move on to the 30-minute order flow and see what the auction and caught was telling, the order flow signals and caught was telling, because we did get many queries on X as well as on email. So we would want to address them about how you were getting some of the features of order flow, but you are not getting all of them confirmed. And we have spoken about how order flow is not just one part, it is almost 5 to 6 things which you club together and then accordingly look to make use of it. So what happened from this week from the open was in Nifty futures there was relatively red caught which was building up. So you can see the 30-minute bars have mostly got red caught, and there were some big numbers. They were not some any small numbers. Even the 10 bar caught which we follow on the 30 minutes and the 3 minute was mostly red. But still the downside was not clean, and we were not getting any sell signals. IS bars were not there. So that was keeping us away from going short using the 30-minute order flow. So you can see how almost on all days we started, except for this 915 bar on 28th where we have got green caught, and this was mainly because these sellers who had piled up the previous day, the caught you can see on Monday was completely red, except for this one green bar in the G period. There were only reds which had piled up. So some of those reds were forced to come out. But then again, when we started moving higher, the caught continued to become red. There was some short covering where we got saw green caught, but then again the up move was getting sold into. And what we do is whenever you are getting an up move on red caught, we are very suspect of that. So we are very suspect of that. And when we are talking about order flow signals, we want at least 3 or 4 of the scenarios to match in. Only then we would want to look for a trade. For example, you are getting a big LLT who is a buyer. With the big LLT buyer, we would want an IB signal in the order flow. Or with a 10 bar caught, which is deep green, we would want an IB bar. So that IB bar, IS bar was missing in Nifty futures all of this week. Yes, we did get up move. These are all short covering moves, but you can see how this 10,000 caught when we made this high of 23155 was shouting for a retracement. So here it is helping you, because this up move, if not for caught, would have told you that we are breaking out when we know we need to go long. But because we had caught, we knew the LLTs were adding up here, red LLTs. The caught is also completely red. It was very the 10 bar caught also was very deep red when this up move happened, which is what was helping us not to go long there. So if you are an aggressive trader, you know that it has gone up on a red card, so you would know when you can look at a shorter time frame IS signals to play for the retracement. What would be the retracement target be? It would be the VWAP, and then you would look for a lower reference. So this is how you would want to play when the cot is not giving you IS bars along with the, when the order flow is not giving you IS or IB bars along with the cot. So that is where you need to sync. And one more reason this week was because of having this huge red card, but the move not coming in because we were in the expiry week. We had the monthly settlement, so we had rolls which were coming over, and there was more confusion regarding this series because the problem was the current Nifty lot size was 25, whereas the February lot size is 75. So if someone is rolling over 2000 contracts of January to February, it'll show up as 25 in the January series, and it was into 3 into the February series. So what caught you were seeing in January was of January was basically the one third of what rolls were happening in February. So that is why that number which was looking so big was actually not that big, but it was divided by 3. So it always pays on a expiry week to have the order flow chart open of the next series also. So it'll help you to be in sync, and it'll help you also to relate to wherever you're getting big rolls, big LLTs. You can just see if that is a roll, a similar number, but it will not be a similar number this side because if you're getting uh, if you're getting a 7,500 lot in January, the same number would be 1000 in sorry, it would be 2500 in February. So whatever you're seeing in January, you will have to divide it by 3 for the February series. So that is the reason there was much of confusion this week, but hopefully that thing will get sorted because from tomorrow we are only trading the 75 lot sizes, so it will come back to what we are used to. So that was one thing which was affecting. But yes, red caught up move on a red caught we is telling it will not sustain, and the up move which happened over the entire day, you can see, got retraced in just 1 30-minute bar. So this is why what happened again here, we saw some covering again today's order flow of Nifty futures. Sorry, this is yesterday's. We saw good green caught in the opening bar. This was again telling us whatever late laggard shots had entered in the swipe lower previous day were forced to come out. And then we went on to probe higher. We got big reds again. We got this 12,621 red caught. So because of this, we made this big swipe lower in the EP rate. But then the structure of the market profile was telling us how the seller were continuing to fail throughout the week. So which is why when we got this RB bar and immediate swipe back above VWAP, we knew that the seller is failing in spite of so many big reds here and not much of greens. What they were, the seller was not able to do a good job. So which is why we went on to confirm this as a failed auction, and from failed moves you get fast moves and opposite moves. So when the seller failed here, and a point to notice would be this 22972 is exactly the IBH of previous day. So that is the reason the buyer is holding this. So the failed auction which we which came in here was because the buyers were holding previous day's VWAP in the initial balance high. So this is how you need to remain in sync, and especially in on days like this where you're getting big moves on both directions. So what we did yesterday, again when we hit that 23185, the 180 target, again we saw some big red card developing. So big red card did not manage to give us a range extension higher, and we closed only at VWAP. So that is what we need to look for. And today finally we got to see in this move higher and sustaining above this extension handle, we saw some green in the cot. The cot for the first time in this week continuously remained green and in big numbers for the entire afternoon today. And then we saw that settlement play coming in where we got this IS30. This was the only IS30 we got from the 24th of Jan. But this IS30 low was not broken, and immediately this got negated. So when these signals come on an expiry day, this is mainly more of inventory adjustment which is happening both in the option and the futures part, and you can uh, let this be as they are. So that is what we wanted to review order flow in Nifty futures for this week. Although the cot was completely red, the seller were not able to give us an initiative selling bar. That is the reason we give so much of importance to the IS and the IBs. So you need cot to show us what the long majority of the time frame is doing, and we need the initiative signals to get us into a trade. So this was what was the order flow for Nifty futures for this week. And now let us now move on to the option segment, especially for today. And let us see how you can make use of order flow in the shortest time frame and see what trades we were getting in the one call and one put. So let's start with the 23,000 call. This is today's order flow, and you can see how we are looking at the 3-minute order flow, and let's see what were the signals and what were the trades we were getting in this call. So we have already discussed what the caught was, what the order flow was showing us, and what the market profile structure was telling us. So yesterday we had a failed auction, and that was the support for today. 22970 972 was already mentioned as the support into the settlement. And today when we opened above previous day's VWAP, we took support about previous day's VWAP. We knew that we can expect more upside. But how do you trade options using that bias? So here in the opening, it was an open auction in range, at least the first 15 minutes. But then we began to move higher. And you got the first IB signal at 9:45. So this is a very important sign, because what we have done, the POC in this option has shifted to the lows. And we first got an RB bar, and then at 9:42 you have got a good green bar which is closed above the VWAP. So POC and VWAP are very important references we look at in options. We have already discussed this, and we have seen how we make use of these two market profile entities using the candlestick chart also. So what we saw was an RB at POC, and then we saw this green bar closing above the VWAP, and the POC also shifted higher in this bar, but we remained above this POC. And you can see how the next bar has given us an IB signal, and it has taken support right at where the POC has shifted. So even though this 942 bar has not been printed as an IB bar, it is a very important bar in options which is telling you the POC has shown RB, and you have got a green bar at VWAP, and this green bar is holding the POCs. So where the day's POC is also shifted. So when you are getting this signal, you know this is the very important support, and your IB gets triggered above this 262 level, and your stop loss would be this 238. And this got triggered in this 954 bar, and we went on to probe higher. And when you get into a signal with this as your stop loss, you will always book profit and then move your stop loss to cost. And what do we get? We got another big IB bar at 1009, and this swiped higher to this 325 level, and then we saw a lot of zeros in this IB bar. So whatever position was there, definitely it makes sense to profit book and trail your stop loss to the lows of this new IB bar. So we did do some consolidation. We had zeros here. We have spoken about how zeros form support. So the starting of the zeros was at the 280 level, which became our support. So this was holding. So as long as this 280 was holding, we were expecting more upside in this, and we got two more IB bars. But you can see how these IB bars, in fact, the 1009 and 1021 one was showing us zeros and sellers. But this IB bar which came at 1027 was a good IB bar which was showing us volumes also. So this IB bar was a good signal. And then you could have taken this NPOC, which was at 293 as your TSL and reference to remain long. What happened at 10:30? We got an RS. But if you are long in this 293 break would mean that you come out of longs and wait for a fresh IB signal. So this broke, and this was a signal that you need to come out of longs, and you need to wait if you get support at this IB low or the VWAP of the day. And we saw that reference of 238, which was the low of the first IB bar. So what we did once the 293 broke was we went on to leave NPOCs higher. We broke lower. We tested VWAP. VWAP was trying to show us some support. It was showing us zeros on the sell side, and we went on to make this low of 249. After initial, when you got a strong open, the first test of VWAP is most of the times defended. So when you saw this green bar and then you saw this IB bar, this was a very good place to re-enter with the stop loss of 249. So you enter about 273, stop loss is 249, you book profit 1:1, and then you trail your rest of the position to cost. So you look for initiative buying signals to go long in options, and when those are coming at VWAP, those are all the more important. In the POC of the day, they're all the more important. So you can see how we went on to make these highs, but we were not able to get about this NPOC. So what we did in the C side, that RS is still holding. So as long as we don't take off the RS, the C side high, there is no uh, chance of looking at more upside in this call. But because of this, you got a retracement trade, and that retracement trade stalled right at this POC. So you again come out of your longs because your trailing stop loss gets hit, or because you see a big RS bar here. You can see how you got zeros on the buy side. So this is a clean enough signal which is coming right below one RS NPOC that the upside is stalling. And because this was coming right near the IBH, in fact in Nifty futures we stalled right at the IBH. So that was telling us that the IBH is not been able to be taken out by the buyers. So you then come out of longs, then you look for a fresh signal. This signal is done. It is valid only for 10 signals. It will give you a move, or it will give you a stop loss. So again, what happened in the dip lower, we got this RB right at that important zone of 238 240, which we are talking about. So this again gave us a bounce. But here we did not get any IB signal. So we look for where the retracement goes, and what you see here is the retracement is stalling at the lower NPOC. So what this call is doing is it is making lower highs, and it is testing VWAP again and again. So this is not a good sign. When the VWAP keeps getting tested again and again, you do get bounces, but it is telling you that the market is weakening. The buyers are not that strong enough now. So again, you made this low in this 12-15 bar, which was more a swipe, but it took support at 240. But then again, we did not get any initiative buying signal to give us a trade, and we stalled right at that NPOC again. So this was happening because we were in a balance. We were probing till this 310 level on the upside, and we are taking support at the 240 on the downside. And when did that change? That changed in the afternoon. So what did it do? Here the order flow in the call will very clearly tell you how the auction changed the character and how the change of polarity happened. So this 240, the POC which was at 240 from the open, shifted to this level. And here we broke. We saw how the POC was taken over with a green bar in the open just before the IB bar. Here what we have got a big red bar with the POC shifting to the top, and the VWAP is also above it. So this was a very clear case signal that now the sellers are taking over this option, this call option. And here the zeros, the start of the zeros, which was at this 250 level, would be our reference. And you can see how we got the next IS bar right at that 250 level. And once you get this IS bar with this NPOC as your stop loss, you can go short in this call. It is also telling you that the upside is now more or less done. And because this is coming in the afternoon, you can look for a break of VWAP and a lower swipe in Nifty futures. And this IS got compounded with another IS. So when you're getting IS plus IS inside 10 bars, it is very strong signal. And you can see how that IS plus IS went on to make a low, and what it is doing as far as it is going lower, it is respecting this POC of the second IS bar 220 level, and we get this third IS in the K period, which went on to make this new lows. So what it is doing, when does then IS give you a good signal, and when do you know that the IS signals are kind of getting exhausted? So this IS bar immediately got retraced, and this was the time where Nifty spot took support at that previous day's POC of 23138. So you can see how the 23138 was holding in this auction, in this call. Although we did a swipe, this IS got negated. We got about this IS POC. We made a swipe higher, but the first swipe gave us a RS bar, and this swipe stalled right at this 220 level. So this 186 break gave us a quick 35 points, and we came back to test new lows. But here you can see it made new lows, but what have you got? You got zeros. And this was right where we made that rejection in the Nifty spot at previous day's POC of 23138. So you can see how everything falls into place. And here, you just need to wait for one good signal. This was a very good classic RB bar with zeros. So you can, in fact, if you're an aggressive trader, you can go long above this 167 with a stop loss at 140, or you'll wait for this IB bar and you go long above this with a stop loss at 179. And because this has come from lows below the VWAP, our first target would be VWAP, where we would book part profit. You will trail to stop loss to this cost. So what you can see how the IB signal gave us a big good up move to the VWAP. And once you hit VWAP, your stop loss would be this 193. We did not do much upside, but we did not break VWAP. And in fact, we stayed above VWAP and we closed at 250. So you can see how the call, the 23,000 call, because of the initiative signals, both on the buy side and the sell side, gave us some beautiful trades today, all through. So that is how you need to make use of this IS and IB signals, and then look to make use of. You get lot of good quality signals in the options. You just need to know the bias, the structure, and then accordingly sync yourself with this. And a quick look at the candlestick. We have spoken about this last week, how beautifully the candlestick in one screen itself shows you wherever you are getting the IB signals and from where you are getting IS, and then where the IB comes back and you need to sync in back with the uh, flow. So this is how you can make use of these charts, and these happen every day and you get these signals every day. So you just need to be patient, wait for the IBs and the IS. You need to understand what the market structure is, and then as per that you need to just uh, relax and trust and let go of your trades. So that is it for today from my side, guys. In case there are any queries, please feel free to post them before we can sign off. So we have the important budget session coming up on Saturday. So we have to see what happens there. The February series will start building up post the event. So we will come back with references on that very shortly. So thank you guys for joining in, and let us have your feedback at support@vtrender.com. In case you have any queries, you can message me on X. My X ID is at Uttam Goel. And we are hoping that these sessions will help you to get better and better at using what we have at vTrender Chats. Thank you for joining in. Signing off. Have a great evening, everyone.